Welcome to today's daily report market analysis videos with me, Richard Perry, market analyst at Hantec on Wednesday, the 24th of July. We've got a bit of a mixed outlook across the dollar moves today. And what we have actually seen is that the euro is a main underperformer. I'll talk about the implications of that. But certainly in the last few days, we've seen the dollar, which has rebounded somewhat. And that has just shifted this corrective dollar outlook that we've had over the last couple of months, actually. One of the drivers has been the expectation of how the ECB are going to act on Thursday, and the concern that, or the expectation that the ECB could possibly announce a deposit rate cut, although it's still in the balance. With expectations of a 10 basis point cut, pretty much around the 50-50 mark, not too far off that, and the euro has suffered on the back of that. But the euro has taken another bit of a leg lower today, and that came after the PMI data out of the Eurozone. The flash PMIs have disappointed. Look at these France data, big miss on the French composite flash PMI down to 51.7, and also on the German data as well, and then look at that across the Eurozone itself, and you can see that the flash composite PMI for the Eurozone 51.5. Now that equates there or thereabouts to a run rate on GDP of around about 0.1% at the beginning of Q3, so certainly not healthy in any real way there. Pretty anemic growth continues in the Eurozone, and the ECB are going to have to certainly ponder that as they look at the monetary policy decisions that they've got to make in the next month, well, tomorrow, but also back out into September, when the market is expecting at least a rate cut on the deposit rate either this month or next time out. So that's why the euro is under pressure today. The dollar has been mixed, as I said, and we've actually seen a little bit of a pull back higher on the gold price today, whereby the gold price slide in the last 2 or 3 sessions has started to find a shade of support. It's back above the 1420 mark. And I'll talk about how that impacts on the chart analysis in a bit. But it's interesting to see that we saw the equity markets in the States yesterday rebounding. There was an announcement that the trade talks between the US and China will resume next week. The face-to-face trade talks for Robert Lighthizer, the US trade representative, and his counterpart in China will resume on Monday. That helped to drive equity markets higher, and general risk appetite improved on the back of that, but that has not really translated through to today. The S&P 500 futures are down 0.3% on the futures this morning, and that's helped to drag certainly FTSE back, although FTSE being dragged back, underperforming, as sterling seems to have rebounded a touch against the Forex majors today. One of the reasons why you're likely to be seeing FTSE underperforming today is that sterling outperformance. The negative correlation continues there. So in terms of data points, we've got the US flash PMIs this afternoon. Obviously, as I've just said, we've seen the Eurozone disappoint. What are we going to see with the US data this afternoon? At 2:45, we've got the the manufacturing flash PMI at 51.0, so a slight improvement from last month, and the services flash PMI, again, a slight improvement. So is that Eurozone data disappointment going to be indicative of what the US faces? And we've also got new home sales at 3 o'clock. That's expected to improve quite strongly by 6% to 660,000. And also keep an eye on the weekly crude stocks, because we saw the API inventories in drawdown much bigger than expected yesterday, and we've got the EIA inventories today expected to be around minus 4 million barrels there. So again, more of a drawdown. So how will that impact on the oil price? Now, my chart today is US dollar CAD, or Canadian loonie, which has been improving in the last 3 sessions. Now, this is coming back towards a key level of resistance. 31.45 was the resistance back in early July and late, and a couple of weeks ago back in mid-July as well. Now we had an intraday move above at 31.45 that couldn't hold into the close, but certainly the move is still continuing higher today. Now look at these momentum indicators. MACD lines accelerating higher, stochastics also, RSI up at 50. Now, what we saw when the dollar bulls were in control throughout the first few months of the year, we saw the RSI around the bottoming around the 50 mark and pulling into the 60s. So 50 is an important area. That was the area where the bulls faced the selling pressure coming back in, 51, 52 area back in June. So around that 50 mark now. So a closing breakout above that base pattern would imply a recovery. And certainly if the RSI went into the 50s and pushed on as the MACD lines and stochastics are, then that would really suggest that the market is improving back towards a recovery target of 32.50, which is this old pivot line area of earlier on throughout 2019 so far. So 32.25 to 32.50 is a pivot area resistance. You could easily see the market pulling back into that given the improvement that we have seen through momentum indicators. In terms of today, well, that 31.45 mark seems to still be a basis of resistance this morning as the market has just unwound some of the overbought momentum of the hourly chart, but is this now unwinding back to a point at which it's a buying opportunity? You've got support initially around the 31.20 mark back towards sort of breakout areas of 30.80 and 30.90. So is this a nice little buying opportunity that we're seeing today on dollar CAD? Anyway, I wish you good luck in your trading today. Please click here to subscribe to my videos, and you can go to our website where you can join our trading webinars. Thank you.